The Golden Arches. McDonald's Corp is the juggernaut of the fast food industry. You would be very hard pushed to find anyone that doesn't know of McDonald's. Their ticker symbol is MCD, and they pay out a growing dividend of 2.37% at the current yield. Now, over the last 5 years, they've had their ups and had their downs. They're actually up 41% in the last 5 years alone. Now, they were trading at around $215 before dropping down to $148 in March of 2020 due to the pandemic. And they got to all-time heights there of about 267, but they've kind of come down in the last wee while due to probably just the general economics of the world to about 233, where they've rested at the moment. Now, it could go up, could go down like any other stock, but we want to look into their dividend. I have several free resources to look into it, such as Dividend Watch, Mac, Simply Wall Street, and Trading 212. Now, we'll be looking at all them and in detail, so let's jump right into it. Now, McDonald's here, does it want me to know? We'll just close that. A lot of you are very familiar with all their products. I know between the UK and the US, they do differ a wee bit, but they are marketing geniuses, absolute masters when it comes to it. From everything from their monopoly, a lot of people in the UK are remember this quite well, to their rewards app that they're rolling out, which again, an amazing upgrade, especially over here in the UK. They're going into their plant range and many other things. They partner up with a lot of places to do promotions such as this. So again, it's everyone knows of a Big Mac. It's one of them things just across the world. There's not an awful lot I can say for McDonald's in terms of most of you probably already know anything I can say about it. Some of you love it, some of you hate it. But jumping on over to their investor side. Now, over here, we can have a look at who they are, where they operate. Now, the who they are part, I can skim through most of this because, again, the Golden Arches are a global community of crew, farmers, suppliers, franchisees, and broken ice cream machines, or McFlurry machines. That was a joke that was meant to hit better, but then I kept on reading. Countless others that make them up as the brand they are. Oh, I did not need to... Okay. I'm trying to download a video editor in the background. What can I say? The show must go on. They have quite a mission and lots of values attached to the McDonald's name. Growth pillars of the consumer landscape. They are very, very good at adapting, bringing in, their whole breakfast menu, for example, bringing in loads of the tastes around the world. I'm sure a few of you in the UK will be very familiar with that there. I do want to see where they operate, although I'm pretty sure it's basically everywhere at the moment, not Russia and probably not North Korea. They could have one, but I don't think they do. North America, near everywhere. South America, I mean, you don't even have to click in. I do know that their menus differ from place to place, but I would say most places in the world have McDonald's, at least one. Okay, over to Simply Wall Street, where we'll be using the wee tools here provided to have a nosy into McDonald's. Now, obviously, they operate and franchise out McDonald's across the world and in the United States. The snowflake analysis here goes over the value of the company, the future outlook, past performance, their financial health, very important detail, and of course, for a lot of us, the dividend, which it scores a decent wee 5 out of 6. Now, they're an undervalued dividend payer. They are trading at 20% below their fair value. That's based on a discounted cash flow model. We'll look at that later on in the video. 11% growth per year, reliable dividend of about 2.37%, and analysis agree it will rise by about 20%. Problems, they have a high level of debt, although debt is not a scary thing for a juggernaut the size of McDonald's. It is something to definitely bear in mind. They have competitors such as Starbucks, Chipotle, Yum Brands, and restaurant brands. We'll look into all them in later videos. Jumping down to their valuation. Their earnings is around $6 billion, their market cap's $171 billion, and saying that even it dwarfs most of the UK companies I could even throw against it. And these ones just do fast food. Pay ratio 28.2, which I think is pretty normal, even compared to most other competitors. Nothing out of the blue for that. Future growth is projected to, it seems actually to decline the next year and then increase year on. That is, again, something to bear in mind. They took a bit of a hit into COVID, but not an awful lot, considering the circumstances. Past performance, they've been growing quite well. Free cash flow is what's been increasing, and that is something to look out for any dividend-paying stock. Down to financial health, it's hard to evaluate simply because short term they're grand, about $1 billion up, and then long term they're a couple of billion down. Now, when you go into debt equity ratio, it's pretty rough, but cash equivalents, they've always got a couple of billion in cash, and to be honest, it's hard to analyze this completely because they're so big. It's McDonald's we're talking about here. They are just absolute monsters when it comes to this. Now, this is very important. Their debt coverage is well covered by operating cash flow. Their interest is also well covered by 8.8 times. That, reading through quite a lot of articles and just general knowledge, is really good. That means their debt's 100%. They're paying it off. They've good coverage on cash flow. So this big scary red box of 34 billion might turn a lot of investors off. But in fact, this was actually the most important part to cover. Down to their dividend. It's not high, but it's notable, stable, growing, and earning and cash flow coverage is great. 2.37%. Now, we can go down here, and my favourite line is growing year on year, earnings per share. Now, if you did pick them up back in 2014-15, their yield was about 3.6%. Now, of course, it's nearly doubled in dividend per share, whilst almost halving in the yield, just due to the overall increase of the value of their stock price. Down to management, they get a cool 20 million a year. Nice. Down to ownership, few people were selling, but millions, which, to be honest, isn't that massive at the moment. We can go down and see that institutions and the general public are the main owners. Vanguard and BlackRock holding 9% and 7% respectively. Okay, over to Dividend Max. Now, Dividend Max is another useful free tool when looking at any company. The thing about this here is they pay 4 dividends per year. And for anyone in the UK, I do have to point out that there is a US withholding tax of 15% on all your dividends. That is something to bear in mind if you're investing in the US from the UK. For the US, this is not a problem for you. Enjoy. Going on here, we can see that the declaration dates are clearly visible, ex-dividend and pay dates. I always like to discuss what they mean for anyone relatively new to the channel, or dividend investing in general. Declaration date, that is the date they basically turn around and say when the ex-dividend date and the pay date's going to be and what they're paying. It's normally follows about a month before the ex-dividend date, and it's usually quite consistent for most companies. If you had 100 shares, which would have cost you a cool 100 do about 20, is that $24,000? $24,000, you got $138 for that, which is pretty crazy. But that is what 100 shares would look like. Going on down here, you can see their annual dividends has been just growing consistently. From 2006, it was $1 to now where it's $5.25. If you invested back in 2006, your dividends are near worth 5 times each share. That's crazy, and they're still growing by between 5 and 10% year on year. Not much else to add to that. That is pretty flawless when it comes to dividends. Jumping on over to Alpha Spread. Now, Alpha Spread has a bit of a different outlook on them, and that is intrinsic value. Now, intrinsic value is one of those ones, it's similar to the discounted cash flow model, but it's calculated a little differently. If you want to look into the absolute of it all, it basically puts their debt against their cash, revenue, free cash flow, and calculates it. At the moment, it's saying they're actually overvalued by 32%. Worst case, they're actually overvalued by 42%. Which means that would sort of give them $135 for intrinsic value. Best case, they're just overvalued by about 6%. Now, you can see how the discounted cash flow model versus intrinsic value is a little different. They are calculated slightly differently. And, of course, you've got to take into account the kind of company that you're putting up against them. It is McDonald's. Now, of course, there is so much to take in when investing in any company, but this is obviously food for thought. McDonald's here on trading 212 MCD. The graph, again, pretty healthy. Back in 2013, you could have picked up for about $95, and of course now it's about $263. That's pretty good capital growth as well. 200,000 employees, and of course in the restaurant sector, and countless across the board. Their main ones: Big Mac, quarter pounder with cheese, fillet o' fish, wraps, shakes, soft drinks, coffee, the McCafe, and other beverages. McCafe being another really big thing that they've rolled out recently. Or not recently, I think they've started, a couple of years ago, but pre-COVID they started opening actual just McCafes on their own. Again, always adapting, great to see. And if you want a cash flow generating business that's the best of the best, it is McDonald's. 9.14 billion. It's not often you can say that with any company in terms of billions for annual, cash flow. Yeah, and investing year on year, expanding as they do. And very mature company. I think they still have a good bit of room to expand, but of course, mature in dividend. Great to see. So yeah, let me know what you think of McDonald's. Now, the thing about this is it's a juggernaut. It's one of the biggest, and the fact this video is relatively short compared to others is because there's not much else to add to it. They are the golden arches. But let me know, are they in your portfolio for any of our friends across water in the US and in the UK? Do you have McDonald's in your portfolio for dividends? Let me know what you think in the comments section below, and any other companies you'd like to see for the US. And there'll be plenty of UK and US in the coming days, so stay tuned. Thank you for joining me. I'll see you all in the next one. Bye bye.